Okay, now let's continue. Yeah, I welcome you back again. Okay. Uh-huh. So, as I was saying, the strategy is very simple. It's very simple. I call it what quick loan strategy. And before that, if this one candle, the only thing you need to do is to identify three candles, right? Uh-huh. So let me draw the candles for you to see. The candle has wicks, but because of time, I won't add the wicks to it. Yes. So let's say this is the candle. Um, there's another candle. So means we have three candles here. This is an upward candle. So one, two, three, three candles. And I said, if you want to identify the fair value gap, right? The fair value gap is the gap in between uh, three candles. Let's say, okay, this one, two, three, three candles. The gap in between the two. So you can all see that this will be the gap. This will be the gap. So from here out to from here to here, here. Yes. So that's what we call fair value gap. Fair value gap. Okay. The space, the space between the three candles, the middle one, because the upward candle didn't fill. Mostly the upward candle must fill up to this place. The upward candle must fill up to this place. But if the upward candle doesn't fill up to this place and it's filled up to here, it means that there is a gap in between. Okay, so um, you can even add the weeks to it. Let's say this candle gave us up to this week, up to this week. Uh, yes, up to this week. And the other one, this one too here. Uh, let me add it to this place and see. It is trading the already. So, so, so here will be the gap. Let me admit this squad. So here and here, can you see? Because that's the gap. Because when the candle was forming, the wick didn't get close. The wick didn't close the downward candle. This candle, this candle didn't get to the downward candle, or the wick didn't touch the downward candle. So there is a space in between. I hope you guys are getting it. There is a space in between the two candles, and this is the space from the upward one to the downward one. The space in between, that's what we call fair value gap. And in forex market, always be there is a gap inside the market. Okay, in the forex market there is gaps in it. Yeah, and meaning that the market is full of what gaps. The market is full of gaps. Let's see uh, which of the pairs has been is okay. Euro CHF. Let's move to some of the this chart is maybe next one. Okay, AUD. Yeah, okay. Let's use this chart. Let's try and see if we can identify some of the gaps. The gaps are many. Always there is a gap in the market. So we can say that this one gap. Yes. I know some of you know it already, but the new ones here, I just want to teach. It will help us when we move forward with our new stuff. Okay, this is the gap. Can you see? Because this candle, the wick of the upward candle didn't get close to the wick of the downward candle. Okay, that makes it what? A gap. That makes it a gap. So that's how to identify fair value gap. Okay. And there are other types of gaps too. There is one gap. The main gap we know. The main gap we know is when market ends on Friday and opens on Sunday or Monday. You see that uh, what the candlestick will be forming something like this. So you see a space in between it. You see a space in between it. And this is the normal gap that we know. But in ICT, there are different types of gaps. In ICT, there are different types of gaps. Okay. And one of the gaps we'll be learning about it is what we call fair value gap or F engine, fair value gap. That's one of the gaps that we'll be learning today or as time goes on. I hope everybody understand the fair value gap. You can unmute yourself and answer it. Hello guys. I hope we all get the fair value gap. Can I continue? Can I continue? Also, no. Hello guys. Hope you all understand it. Achiever, hope you all get it. So I can continue.
Yeah, bro. Yeah.
Okay. Okay. Yes. So before we were able to um, move on with our strategy, there is another thing we need to identify or we need to see. That's what an order block. And with order block, we all know what an order block is. We all know what an order block is. So, so this is not the right time for us to learn order block. We all know what an order block is, right? Uh-huh. So we can say that this is an order block. Yeah. So we can say that this is an order block where it's all another block here. Yeah, this kind of this thing. So we can say that this is an order. So we can say that this is an order block. Yeah, this small candle is an order block. Why is it an order block? Because it's an order block because from here, from this side, the market was on what upward trend. And when the market is an upward trend and you see there was a selling candle, or a bearish candle in it, it means that the market has been blocked. You see, meaning that somebody has placed a sell, and you need to uh, and you need to go there and fill the selling order. You see, before you can able to continue or move to where you are going. Yes, and here too, the market was in an upward trend. Okay, and there was a selling when there was a selling candle over here at this zone. So market have to retrace back to the order block. So market have to retrace from here to here. You see, before the market can go up, before the market can go up again. Okay. So when we talk about an order block is when what a candle has blocked um, a selling opportunity or a buying opportunity. So let's see if you can identify another order blocker. This one of it. There are types of order block. No? We have breaker block. There are types. There are many types of order block. This one, this another one. This can do too. This can do too. Yes, this one is an order block. So one thing I can tell you that when price gets to an order block, the market reverse. The market reverse. Or you can even use an order block to find to find entry. Okay, you can use an order block to find entry. So you are trading with only order block. There is nothing else again. You are trading with only order block. So you can identify the order block, use your trend line, draw it over there, and wait for the market or wait for the price to get there. When the price gets there, the market will reverse. So see how this one is another block. See how when the price got here, it bounces back, it touches it again, and see how the market went up from here all the way to this side. I hope um, you have gotten the concept of the order block. Okay, so before we can continue with the strategy, there are some few things we need to know. One is what fair value gap. One is fair value gap. The other one is what order block. Okay, other one is what order block. Yes, and the third one is um, engulfing. When I talk about engulfing, I hope you all know engulf. Engulfing is a reversal candle. Engulfing is a reversal candle. It has what uh, oh, so engulfing. So engulfing is something like this. Yes, engulfing candle. Engulfing is something like this. Okay, so anytime you see this candle, it means that it's an engulfing candle. Engulfing candle is a strong reversal candle. Okay, so let's identify some of the engulfing candle. This one of it. This candle, this candle. Okay, there are types of candles. This an engulfing candle. Okay, engulf that. Oh, some of you guys said you can't hear. Why? What's the problem? So that's the what engulfing candle. Exactly. Uh-huh. So yes, and the last one is what we call liquidity. Yes. So the liquidity is very. We have two types of liquidity. Liquidity. So this is the liquidity I'm talking about. Where is it? Liquidity. So liquidity. Yeah. Before you know, we have two types of liquidity. We have liquidity void, the void, liquidity void, and what? And liquidity pool, PULL. They are all the same. I'm sorry, they are all different. So when we talk about liquidity pool is where you have series of candles moving in the right direction without an order block. Okay, so liquidity pool is when you have series of candles or series of what candles moving in the same direction without an order block. So here we can see that this candle is moving in one direction. There is no order block in it. You see, yes, and that's liquidity pool. When you have series of candlesticks without moving, series of candlesticks moving in the same direction without an order block. That's what we call liquidity pool. Okay. Before I continue, I want to know if you have any question. If you have any question, you can post it. If you have any question, you can ask. Okay, you can ask the question before we continue. Guys, do you have any question?
It's clear.
It's clear. Okay, so
Come
we can.
on. Yeah.
Okay, okay. So, um, as we continue, the quick loan strategy is very simple. We have identified three things. One, we have identified three things, which is what? The first one is what? Fair value gap. Fair value gap. The next one is what? Order block, right? And the last one is what? Liquidity. The last one is what? Liquidity. Liquidity. Okay. So these are the three things that's what um you need to identify. And I've told you that the order block is when you see a space in between three candles. The middle candle, when the wick doesn't touch the first candle or the last candle, the space in between, that's the order block. Okay. And I also said about the order, sorry, that's the fair value gap, and we spoke about the order block. Uh-huh. We spoke about the liquidity. I told that the liquidity is when market is moving in one direction without an order block. Okay, yes, that's liquidity. Yes. So let's move on to how you can combine these three to get a correct sniper entry in ICT. Okay, and how you can combine these three to get a sniper entry in ICT. And one advantage in this is that mostly you can trade it in all time session. Okay, but I mostly use um, the landing session. The landing session between 12 noon to 3. 12 noon to 3. The reason why I retrade it within that time is because during 12 to 3, at least two of two of the two of the markets have been open. The London market is open and the New York market too. But the advisable time you can trade is between from 7 to 5. But any like all those market opens 24/7 during 7 to 5, 2 times sessions have been open. But it doesn't mean that you can't trade in the rest of the time. You can trade in the rest because around from 5 p.m. going, that time the Asian session was is now has now resumed, or the yes, the Asian session has now resumed. The Asian session, it consists of the yen and the other and the CHF and the other stuffs. Okay, yeah. But mostly I trade this what can I say, on the landing session from 12 noon to 3 p.m. Okay, yes. So before we can, before we'll be able to trade this um this strategy, there are some of the things we need to know. Whether one, if the market is moving upwards or is moving downward, or the market is moving in a directional bias. See if the market is moving in a directional bias or the market is consolidating. That's the first thing you need to check. Whether the market is consolidating, one, or the market is moving in a bias. When we say the market is moving in a bias, we are saying that if whether the market is selling or buying, whether the trade is a selling trade, or the trade was is a buying trade. Yes, that's the first thing you need to know. And the next thing is that make sure that your order block has captured what liquidity. Make sure your order block has captured liquidity. Let's use this one as an example. This a liquidity, right? This a liquidity, but this liquidity have not captured with any other block because there is no buy candle in between. Okay, there is no buy candle in between. Let's see here. Uh, Let me use this one. The free trading video. Okay, this one didn't touch you. Let me see if it will be able to touch. Yeah, it still didn't touch. Yeah. So here we can say that, let's use this one as an example. Yeah, we can say that one, the market was in a directional bias this side. You can see that one, the market was in a directional bias, meaning that the market was moving upward. It was an upward trend. It was an upward trend, and moreover, there is a liquidity there. The liquidity is when this is moving up, and we can see series of other blocks in it. Can see series of other blocks in it. Okay, yes. And also, there is a fair value gap in it too. Can you all see the fair value gap here? Here. Oh, let me use the trend line. No, no, not this one. Yes. So here, that's one, and this another one. Can you see the fair value gap? It's so simple, you know. Can you see the fair value gap? Guys, can you see it? If someone has seen the fair value gap, you can. Hello guys. Achieva.
Yo, bro.
Yeah. Are you guys following?
Uh, Yeah, we are following.
Yeah. So Abi, you can see the fair value gap between this candle
Yeah,
and the other candle. The space, that small space in between. And Daniel, right?
yeah.
And William. I hope you guys too can also see. Have I muted you? Okay. So because we have seen the fair value gap, before we're able to trade a quick loan strategy, there are three things. One, the liquidity. And here there is a liquidity here. The market is moving upward bias. There is a liquidity there. And two, it's a directional market. It is moving upward. This market is not consolidating. The market is not consolidating. It is moving upward. Okay, it is moving upward. And three, there is an order block. And we have been able to identify the order block. This is the order block. Right. This is the order block. This candle, the last candle here, that's the order block. And three, we have been able to identify our what uh, our fair value gap, and to make it more solid, they are like all of them have been able to pass. But like what makes it more solid is that the other block is in combination with what the fair value gap, and it makes it what means that there is a consolidation. How do you mention this word? There is a confluence. Yes, yes. There is a confluence here. There is a confluence at this level. So anytime you see that the market is moving upward, right? The market is moving upward, and you missed the first buying opportunity. You miss the first buying opportunity. Don't just rush to the market, okay? Don't just rush to the market. And always don't just rush. Know that when the market goes up, it will retrace. It will retrace to the order block in combination with the fair value gap before it moves up again, or before it will move downward again. Is that clear? So here the market was a selling market. One, and even with this market, I can see that the market has broken the trend line. It has broken trend line, and what it is now retesting. That's another way too. By here, we can wait for the market to what to come down. We can wait for the market to come down from this side to here. So here around this side, we can put our pending orders there. So when the market gets there, it will just what activate uh, our trades. When the market gets there, it will just activate our trade. And we can put our TP here. This side. This side can be our TP. Here. Here can be our TP. And the SL can be very small because with this one, you can even use 3 pips SL. Because with this one, we all know that the market is not 100% right. Okay. So when you use 3 pips SL, when the market breaks, when the market hits your SL, there is no way say to go up. So so here will be your SL. Let me change it to green. Here. The green line will be the SL. Here will be your entry. So here you can even pick 3 entries from here. You can pick 3 entries from here. One will be on the order block, two will be 50% or the middle of the fair value gap. You see, and the last one can be at the bottom of the fair value gap or on top of the fair value gap. So the entries can be inside the fair value gap or around the order block. Is that clear? Is that clear? So that's how to trade this one, the quick loan strategy. Is there any question? Is there any question? Hello, guys. William, is there any question?
No questions, bro. You can continue.
Okay, okay. So yeah, that's one way of what finding what liquidity or um, or trading with what sniper entry. And here when the market gets here, it is only the week which will be around this side. You see that the market, not the candlestick or the wick can form up to this place, then move. And let us all know that the market was also trading what in structures. And here there is a structure here. When the market move, here is our maximum TP, right? So the market can move up to this place. It will break the structure. This is the structure here. That's what we call market structure. It's a market structure because here, when the market, because the market was a downward trend, the market must form what higher lows and lower lows. Hope you know higher lows and lower lows. The market must form higher lows and lower lows. If you talk about higher lows, this is it. This high is at the top. This is one of the high, and it came down to form a low. You see, and it has come down again. It has come down again to form another low. Right. That's what we call higher low. So higher low or what lower high. When it is coming down, it is higher low. When it is going up, it is what lower high. Yes, and this lower low. This one is a low because it is at the bottom. It's a low, and it is still going down again. That makes it a low. So here and here is what we call lower low. Is that clear? So the market has broken structure. And the market breaks. There are ways for you. There are a lot of ways for you to know when there are many ways for you to know when the market will retrace and where the market and where the retracement will end. And I've given you one way for you to know where the retracement will end. That's the quick loan strategy. So here the market was in an uptrend. There is a retracement going on. So this one, this is the 4 hours chart. So we can say that this evening or Monday, the market will trace up to this place before it will move up, before it will move up again. Okay, so when the market is moving up, also there will be a retracement. And you must know that here too is an order block here. So the market can retrace up to this place. The market can move with a fair value gap. The fair value gap. The market will move up to this place. Then what? Then it has broken structure. This here is the structure. Then move what we call shift the market structure to this place. The market will never break this one because it has already broken structure. When then after, then we can find another entry here. Then it will move straight to our TP. Okay, so this one and this what we call the higher high. This one high, it is moving up. So higher high and what lower high. Exactly. Exactly. So I think we can end it here. We can end it here. If you have any question, you can ask. Okay. You can ask your questions. Answer questions now. Hello guys.
Yo, bro.
Yeah.
Hello.
Hello. Yeah, I can hear you. I can hear you.
Yeah.